All right, guys. Today we've got the FOMC Minutes report going live in about how long we got? We got about 55 minutes until the FOMC Minutes report comes out. Let me make sure I got everything squared away here. I'm pretty sure I do. But yeah, we'll see what kind of volatility it brings. Sometimes, this thing comes out and it's just not the most volatile thing ever. And other times it comes out and we just have big movement from it. I think this one will be interesting because the last Fed decision was a rate cut. And that was the first rate cut in over a year. And so basically for the first time in a year, we're getting a Fed minutes report that has something to do outside of being a pause in rates, which is what we've seen again for years. And yeah, tomorrow we got the CPI report. And so, what we're thinking in regards to rate cuts has more weight, I would say, over markets. Put this up. And I'll get some music. There we go. And where's the music at? What's up, Yes? Game, Talk, K, Pawn, Han, Dougie. We got 55 minutes left. 55 minutes. I'll put a timer up. Yeah, I'll probably start to trade a little bit leading into this. But again, so as I always say, every 6 weeks, the Fed meets to decide how much they want to raise or lower rates. They need to exit out of some stuff. Let me exit out of some stuff. I can feel my computer getting a little overpowered here. Chat GPT. We're gonna cut out Discord for now too. Then we'll do a poll here. Chat. There we go. My computer lagged out for a second. I don't know if you guys saw lag. Yeah, I got too much stuff up right now. We got Reddit. I got a bunch of memory on this computer, but it's a little bit older. It's like 3 years old. It's probably time for me to upgrade desktops. They probably got some cool stuff out now. I haven't looked at hardware in a minute, but yeah. So again, we are going to keep this page up, which is, the likelihood regarding rate cuts and pauses. So one thing that I'm seeing trending in the last few days is one thing that I've been seeing trending in the last few days is the likelihood of a pause next meeting has been increasing. At this point, it's almost at 21% likelihood of a rate pause instead of a cut, but we're still showing, 80% chance of a 25 basis point cut. This is 25 basis points here. This would be a decrease. You can kind of just to show, if anybody doesn't know how to read this, so currently the rate is at 475. This is basis points. So this is in basis points. So this would be currently the rate is at 4.375 and 5%. 4.375, 4.75, and 5% is the current interest rate for the federal funds rate, the short-term interest rate. Now, this option would be keeping it the same meeting to meeting, which would maintain it at 475 to 500 basis points, or 4.75 to 5%. And then this side shows a decrease of 25 basis points. So this would be bringing the short-term interest rates around the country down to 4.5 to 4.75%. I don't know why they do it in basis points. It's a lot easier to understand if you just put it in actual percentages or actual decimal points. I'm not sure why they do basis points, but there's a very famous saying in The Big Short, I think it is, that bankers and all that like to use big words and make things intentionally more confusing so people just leave them alone. Maybe that's why they do basis points, so nobody understands what the heck people are talking about. It's a lot, to simple it down, it's a lot easier just to say, hey, these are short-term interest rates that banks charge each other, and eventually it'll trickle into everything else. at 4.75% annually, or 4.75, annualized. So whatever it is divided by 12, depending on the rate. If it's monthly, you divide it by 12. If it's, whatever, however long the term is. But Yeah, I'm trying to pull a timer up. Sorry, let me pull it up right now. They must have added something to this. Here's the timer. I finally got it working. Let's see how long we got. We have about 50 minutes. All right, so here's when the actual report comes out. We'll make this smaller. Bullish or bearish? I don't know. Here's the thing. So the Fed Minutes report shows a detailed report on why the Fed did what they did 3 weeks ago in the Fed decision, which was a pause, or which was the first rate cut in a year. And so my guess is that the report is going to contain dovish data because it's based off of the 50 basis point cut that we did 3 weeks ago. But they should give at least some foresight into what they might potentially do the next meeting too. So like, we'll see. Since this report, things have opened up a lot more hawkish than expected. A lot more hawkish, meaning more restrictive stance by the Fed. And what I mean by more restrictive is a Fed that wants to keep interest rates high to push down spending to combat inflation. And why is the Fed kind of changed their tune a little bit to be more hawkish or restrictive in terms of monetary policy? Why do they want higher interest rates now or less rate cuts? It's because payroll data showed up at 254,000 jobs, and if that's too strong, like if payroll data is too strong, more spending occurs. When more spending occurs, businesses raise prices because they can, supply and demand. If more people are buying stuff, you raise the price up. That's how it goes. And that's what businesses do. And so the Federal Reserve, my guess, is changing their tune because they don't want inflation to spike again, which is smart. This is something that I've said for a year or two now, really less than a year, maybe probably like 6 or 7 months. But I've been very hawkish. I don't mind a restrictive monetary policy. People buying houses, lenders obviously want lower rates, but I'm okay with making it restrictive so that we really catch up with pricing. Because if not, if we don't slow inflation down, then everybody's going to be unhappy. And that's the real reason why people are unhappy today, is because prices have gone up so much in 5 years. That's why people can't afford things. That's why, even to a certain extent, rent prices, even though they're more directly influenced by rates, but expenses are up. So landlords raise prices. Amazon doing well today. Tesla basically purely sideways. Supermicro semiconductors at 47.40s. So that's had an interesting volatile couple day period. It's just moving up and down at a big range. It's a stock that AI people watch. But it's been downtrending since February of this year, starting to kind of maybe put in a little double bottom. But it's just a low float AI stock. I'm kind of worried about it. So are we bullish? I have no idea. Nobody knows if this is going to be bullish or bearish. We'll have to wait and see. We'll react to it. I'll use AI to break it all down when it drops, and then we can try to gauge sentiment from that, I think. Oh yeah, this is not beer. This is organic cola. All right, by Main Root, or from Main Root. It's organic cola. Don't judge me. I'm not drinking over here at noon. Girlfriend, bro, I am in my mid-30s and married. Amazon doing really well. Amazon up to 185. I still think the PE ratio is kind of high on Amazon. Another thing to consider is Tesla. Tesla's Cybertruck, or I keep saying Cybertruck, but Tesla's Robotaxi event is tomorrow night at 9 o'clock my time in Central Time. We'll stream it anyway, but it's kind of late. I'm going to have to be working tomorrow night. And then we also have CPI tomorrow morning. So it's just a busy, busy time right now in markets. Tomorrow CPI, Friday's PPI. Tomorrow we have the Tesla Robotaxi We Robot event. And so that should... A lot of the time Tesla's buy the rumor, sell the news. It goes up in anticipation of these events, and then once the event happens, it drops. That's typically what we see from Tesla, but it's not always the same. Alphabet. Oh, thank you. Huh? No, I'm good. Thank you. Love you. All right. My wife brought me pizza. Look at that. margarita pizza. You'd love to see it. But yeah, Amazon up to 185s. I'm gonna do a poll like we always do here. Yeah, I'm gonna do a poll right now, guys, and the poll is gonna ask, are you bullish or bearish on today's Fed? Yeah, vote on the poll. Let me know your direction here, chat. ECB press conference. Is there an ECB conference going on right now? I know there's a bunch of Fed speakers at this point in markets. There's a bunch of Fed speakers going on. Like if we look at the Fed calendar here. So today we have... Is that today? Let me make sure. Monday. This week at least we've had a lot of stuff. Today we have Bostic doing it at 8 a.m. We have Bostic speaking. We've got Logan speaking at 9:15 today. They already spoke. Barkin speaking again at 10:30. Williams speaking at 11. Logan speaking at 10:45. Jefferson speaking at 12:30. Daly's about to speak in a couple hours. Why lower rates further if job numbers are good? I know, I agree. But you got to understand, it's subject to change. It will change leading up. Like, we got 3 weeks, basically. So every Fed Minutes report, when the Fed Minutes report drops, and this is a detailed report on why the Fed chose to make the decision they did in the last meeting, right? So this is just a report on why they did what they did last time. When this drops, we have 3 weeks to the FOMC meeting. And so we still have 3 weeks to try to gauge federal decisions, like federal sentiment by the Fed and by Powell and everybody else. We got 3 weeks because the November meeting, right now it's really probable that we're going to cut rates 25 basis points again. Another rate cut, but a little bit less than last time's 50 for the November meeting. And then we got another meeting in December. There's no meeting in October. We just have the Fed Minutes report. What about gold now? Bearish or bullish on gold? I don't know. Gold's been breaking highs for a long time. I'm just hesitant to buy it up because of that. Put a daily chart over the last 3 years on gold. Like, look, if I put a yearly or a daily chart on gold, right, where every candlestick represents a day. Let me make sure this is right. Yeah, for 3 years. And then I stretch this out. Oh no, that's Tesla. Yeah, and then I stretch this out. This is gold over a 3 year period of time. All right, so gold has gone up a lot. And gold can downtrend for years as well. So I haven't really been one that wanted to buy gold over the last few weeks just because of how much it's been up. Here's a monthly chart. And again, I'm not saying gold's going to go up long term, but short term it can downtrend for a long term as well. So I'm just not ready to buy it for me, but everybody's different. It might be a good time to buy it. I don't know. Yeah, I mean, I hope they don't. Miho, I think they shouldn't. But even Google's had a good year stock-wise. Their stock's been doing well. The FOMC meeting is in November. This is the FOMC Minutes report. So this is a filing, a big document that we'll review. That does influence the market sometimes on the last Fed meeting, basically why they did what they did. I'm going to eat my pizza here without showing my face, so don't judge me too much. Yeah, but Nvidia has also pushed up a lot in the last like 3 days. So they've been kind of slowly edging higher. If you put like a 5-minute chart up, you can kind of see Nvidia has been kind of edging higher the last 3 days as well. It's getting kind of close. The lifetime highs on this one are like right up here. You know, so it's got like this much room until it hits lifetime highs. So that's something to watch too, I think, is when will the SPY break lifetime highs again, or Nvidia as well. Nvidia, oh, the SPY just broke lifetime highs. I didn't even realize this. Man, I am behind here. SPY broke lifetime highs today, which is shocking. It is something I talked about this morning, where sometimes when we get this close to lifetime highs, it's pretty probable we're at least going to move up. Everybody kind of bulls join in, and they start pumping it higher. I wish I could have capitalized on it more, but I did say I said sometimes these high levels act like a magnet as you get closer to them. And yeah, that's what happened today. We'll see if CPI report influences this, but the SPY broke lifetime highs again. New lifetime highs on the SPY are 577.06 today. So that's interesting. We'll see if it continues that as well. Oh, wait, hold on. Yeah, gold. Again, gold on the right side. Supermicro semiconductors has had a pretty volatile day. Up a lot. Daily chart for Supermicro. Supermicro, the problem, the float's very low. It's like 60 million, which is tiny for a stock like this. So a very small float. Because of that, it's highly, highly volatile. And I think it's just a little bit more expensive, so the volatility is a little bit more pronounced, if that makes sense. But because if you see a stock, like a $1 to $10 stock doing this, you notice it less, just because it's such a, it's less dollars overall. But Supermicro, very small float, has gone up really big in the last year, down really big in the last year, and so it's still net green, but very volatile. So just be careful with stuff like this. The float's very small. You can make a lot or lose a lot. Yeah, here's the SPY. Again, SPY broke lifetime highs, man. We'll see if it continues up there. Yeah, so we already talked about gold. Amazon just broke highs of the day as well. Yeah, I'm surprised my choppy prediction didn't work out either. But I think it's probably because the FOMC Minutes report's not nearly as big as the FOMC meeting. And so the FOMC meeting is going to cause much more volatility that people are going to be afraid of. I still think tomorrow, or maybe at the end of the today, leading into this report, we're going to get choppiness. But again, we'll see. It depends on what the report shows up as. Again, I'll trade a little bit. Yeah, so we'll trade a little bit. I'm going to short the NASDAQ here. I think now is probably the time to short it, but I might be wrong. All right, so it's the duck song. So somebody's asking me to explain ETF decay. Okay, so it's basically the loss in value. It's specific types of ETFs, both leveraged and inverse, over time due to the way they are structured and kind of like the mechanics of how they achieve their investment objectives. I'm just going to read what AI says. It's primarily a concern for short-term traders rather than long-term investors. And so daily rebalancing causes it. If an ETF is designed to provide 2x the daily performance of an index, and that index goes up 10% in one day and down 10% the next, the ETF may lose value over time due to the compounding returns even if the index returns to its original level. I'm sorry, guys. I'm eating pizza on the background. I'll put my picture up in a second. I'm eating pizza right now. Yeah, I'm just seeing if we can break down a little bit more. Yeah. Does pineapple belong on pizza? No. It's unnatural. Alright, so we're out. We made a little bit. Not much, but not a bad little string of trades. Do you eat Domino's pizza? I love Domino's pizza personally. I like Domino's in general. A lot of variety. Pizza Hut wings are better, though. Domino wings are kind of weak. But I get sick if I eat it for whatever reason. I don't know what it is. Lost 10K this morning? You gotta scale down your size. You're trading too crazy then. Not unless you're like a millionaire. Which of course everybody on the internet is, you know. But yep, I said it, Ricky. What are you gonna do about it, bro? I said it. It's not natural. You know. Alright, Amazon pushing up. Tesla at 244s. Gold? Again, gold is down the last couple weeks. Or last, like, let me see. Last, like, 4 or 5 days, actually, right? Yeah, so gold is down. It's been 1, 2, 3, 4, 5. 5 days in a row. But it's pulling back. If you zoom out and put on a yearly chart, it's up a lot. Just this year in 2024, it's up from... It's up about 30% just this year in 2024. Gold is. Since 2023, gold is up. Yeah, gold is up about 50% since 2023. So it's had a really good couple year period. And it's just not my favorite time to buy it right now, personally. I love pineapples. I just don't like them on pizza. Yeah, I mean, I'd eat it if I was hungry. What's up, geeky? Is there a rule? I don't think there is on Top Step. Let me see. No, you can trade during news on Top Step, I'm pretty sure. They do recommend caution in avoiding trading when a release may impact a product. But I'm not 100% sure. I would check with them first. Yeah, it's okay, Aaron. Yeah, I was looking at this thing that this guy posted, and it was about real estate, and I can't tell if it's total complete nonsense with massive risk, or if it's actually a good idea, because it seems logical when you really think about it, because prices of real estate go up over time, usually, not always, but usually they go up over time, and so, you know, it was called BRRRR, which is buy, renovate, refinance, repeat. So basically, you buy a house. It's broken down, so you get it for under value. You repair it, renovate it, rent it out, and then refinance that property and use the money you make from refinancing it, like the loan, to buy another property. And then you do the same thing and then sell it, and then refinance it again. The problem is you got like multiple different. Why would you refinance it at all? I guess, but I guess so you could afford the next property. But I don't know. It seems a little risky to me. But I also understand most real estate goes up over time, and if that's the case, then you are going to make money doing that. But I don't know. I made like 15 or 20 bucks, but it was just one little trade. I'm a little nervous to trade big ahead of this event. The range for the market right now is very small. Like, here's the range. You know? So, I mean, it's not really... There's not a lot of pennies to pick up, or ticks per share, or ticks per futures contract, I guess. All right, guys. So again, we do have the FOMC Minutes report today. Detailed report why the Fed chose to make the decision they did last week or 3 weeks ago for the FOMC decision, which was a 50 basis point rate cut. This report is going to have implications regarding November's decision, and right now this has been actively changing from. You know, originally this was 25 basis points or 50 basis points next meeting, right? So originally this had two options, which were a 25 basis point option and a 50 basis point option. Now it's pivoted to only a 25 basis point option, and 13% of people think we might pause next meeting, which will mean no rate change, no rate decision. And again, I'm curious. I don't know what we're going to get, but... it's when the FOMC Minutes report goes out, so it's coming out in about 30 minutes or so, a little bit later than this timer. Timer's a little bit early, but what do you think about the Fed? Everybody likes to hate the Fed. You know, no matter what they do, people are going to be mad. Somebody's going to be upset. You know, they could bring interest rates all the way up. And people who fear inflation, like me, are going to say, yay, you know, good job, Fed. You brought rates out. You were hawkish. Good job. Like, that's what I want. I'd rather a hawkish stance. But then people who want to buy houses right now, or lenders or real estate agents, then they're going to say, what the heck, Fed? How dare you? You're evil, right? So, like, no matter what happens, people are going to whine about it. If you take 2020 as an example, you know, we had the pandemic. Everything was, like, struggling. People were struggling, and so the Fed cut interest rates down to almost zero. And they also printed money and did some other stuff, and then people got upset about that. But and I get it. I don't like that. I don't like it's too much quantitative easing and too much, you know, money printing for me. But people got upset about it, and the same people would probably be upset if they didn't do anything. If they chose not to do that stuff, they would complain that the Fed wasn't doing anything. You know, so like. I think it's a really tough job. And do I agree with every decision they make? Of course not. They, you know, again, if it was up to me, I wouldn't have cut rates in the first place. But still, I think they try to be balanced mostly because one of the protections of having all this stuff public is that people can look at it, they can critique it, and none of them necessarily want to crash or anything like that under their watch. Recessions. So I think they try to be balanced, but, you know. No, Powell's not speaking. Oh, no, I spilt my drink, man. Yeah, man. Oh, dude. That's a Dodgers hat anyway. I legit just vacuumed my carpet, too. I had to buy a carpet shampooer and, like, vacuum everything. Yeah, but, I mean, you're taking it out of context. Who said that? Another one. So that whole trade, we had like 3 contracts. We got a bad fill on one of them and made $1. I'm pretty sure after commissions. But on the rest of the trade, like net, we ended up netting probably like $15, which is fine, you know, because the trade took maybe 30 seconds or however. I don't even know how long that trade took. I don't remember. But yeah, I mean, one bad fill on 3 contracts, taking it out of context and saying, oh, you made $1. I mean, you could critique it. That's fine. But come on now. Yeah, no, this keyboard is a wired keyboard. It's a silent one. People are less angry with me. Apparently my typing's loud and obnoxious. I didn't know. The last cut poll was just like this a month ago. Yeah, I'm looking at the poll options. 62% are bullish on this report. I don't know if I'm bullish. Tomorrow's CPI report is going to be much more influential than this. But I think the market already broke lifetime highs. I think it's probably going to correct a little bit from this report. But I might be wrong. I don't know. I'm going to put it in sub-only mode as well. And again, Powell's not speaking today. I'm gonna detail this in chat so you guys can see this. Look, or not in chat. I'll put it out on a banner. All right. It's just a report. It's no meeting. It's a report. It's a reaction to the last Fed meeting. It honestly seems like someone leaked the report. I don't see why everything would pump so green today so quickly if not. Yeah, I mean, you gotta, like, usually when people don't understand why the market does something, they think there has to be some underlying catalyst for the market to do it. Number one, that's not true. The market can just pump up because there's more buyers than sellers for whatever reason today. Super nuanced things. It doesn't necessarily have to be a really big catalyst to cause this type of pump that we've seen today. And I think this pump is most likely based off of a couple different things. I think number one, we had this big decrease here. We've had this big decrease here. And so far this year, we had the dock worker strike, right? So we had the dock worker strike, caused downward pressure. We've had corrections in NVIDIA, and a lot of the market has been following NVIDIA. But if we look at Amazon, it's green today. So Amazon pushed up after Amazon. Let me see. Amazon's been dropping for like a week and a half. Amazon pushed up today. Apple pushed green today, and these are all heavily weighted stocks. Apple ripped up big. Tesla was slightly green most of the day. NVIDIA was flat, and it's up a lot already. And so this is probably just an extension reaction based off of the strike ending, Amazon, Apple moving up a lot, other tech stocks doing okay. But I don't know if there's necessarily some big catalyst, especially not this type of move. I mean, it's not a small move. But again, you got to understand, as we get closer and closer to lifetime highs on the SPY, more buyers step in because they recognize like the magnet-like aspect of it. Like here's the previous lifetime high. You can see what we did all morning. We just ripped up towards it. And so these high levels, which this was the previous high, can act kind of like magnets on this stuff. No, I'm out of everything. I'm out of all those shorts. There's no speech. The report might make the market go up. I don't really know. Nobody does. Yeah, a lot of people. What's the symbol for silver? I always get it wrong. So here's gold on the right side. I always forget. Is it SC? The futures contract, I mean. No. Is it SLV? Is it S? I always get it wrong. Is it SL? No. No. Somebody list. I'm gonna have to use AI to break this down. SI. So it's SI. So here's silver. We put up a daily chart. Silver's definitely underperforming gold. Here's gold. And here's the same time frame chart on silver. Here, let me put the same time frame. So here's gold. And then here's roughly the same time frame. I think I need to be like right here for the same time frame. Yeah. So that's the same time frame for gold and silver. Gold is up much more than silver is. Silver is a good precious metal. They use it a lot in electronics, so there's going to be an innate need for it into the future. I guess silver might be a good time to buy it, but I also think they get pressure for silver price to go down because people need it so much. It takes it out of like the luxury aspect of it and puts it more towards utility, and so that sometimes can drive prices of precious metals down. Gold at 260 or 2620, so hit 2700 highs. Nvidia is still pretty much down today, but could be worse. Honestly, just wondering why the report would move markets if it's just a recap for the meeting. A lot of time it doesn't. But this is the, but sometimes it has. And so we cover it every 3 weeks. And again, it doesn't every time, but sometimes it does and sometimes it doesn't. And this one specifically is after the first rate cut in over a year. And so I think this report specifically relative to others is has a little bit more interest, I would say, versus the last, multiple. Right, the minutes are a report of what the FOMC talked about and how they feel about the markets, about market stability. Yeah, for sure. I'm not saying it's going to move markets. I really don't know. What do you think about Apple? I like Apple long term. Short term, it's volatile, but long term is good. Who knows how long it'll last, though? I'm going to change the song. I'm just not feeling it. Nice use of tech to quickly graphically illustrate a point made in chat, bravo, sir. It'll be a good while before AI can do that. Well, which one? Silver just broke out on the 40-year trend and giant cup and handle. Yeah, I mean, I like silver long term. I really do. I think silver is going to be okay long term. You need it for tech. The problem, though, is this: as prices have gone up so much. Here's the real gold price. Okay, I'm trying to think of how to phrase this. So silver historically has been used in a lot of jewelry, right? It's been historically used in a lot of jewelry, and that's great. But as inflation has happened throughout the years, less and less people wear silver as jewelry anymore. They still wear it some, but gold is the much more luxurious, valued, precious metal versus silver. And so people use it for luxury goods, and sometimes luxury goods give prices a boost with stuff like gold and silver, but I still think silver has more utility. And so we'll see. Who knows? I'm not claiming to know. I really don't. Apple breaking highs today, or not breaking highs. Where's the Apple highs? 237s. So Apple's going up today, though. Okay, gotcha. Yeah. No, thanks, Sam. Appreciate it. I'm wondering if this one will be a bit behind considering how strong numbers came in after the cut. Yeah, I mean, that's what I was thinking too. That's the first thing I said, is that payroll numbers showed up after the last FOMC decision. And I think if the payroll numbers had been just a week like a week before the Fed chose to make that decision, if that same payroll report came out, the Federal Reserve would be much less likely to cut rates 50 basis points. And they would be much more likely to do 25. I still think they would cut, but I don't think they would do 50. I think they would do 25. And then maybe a plan of like 25, pause, 25 to make 50 basis point cut this year. But since they already did 50 basis point cut, now the question is, do we go continue a string of rate cuts with 25 next meeting in November, or do we pause now? And pausing is somewhat of a probability. Is it really probable? No, but it's still possible. We got a 20% chance of that. Agreed, but silver is essential for society to survive. Yes, exactly. Yeah, for sure. It's still really used. You know, so people still use it a lot, and you know, it's silver. It's got utility, you know, to back it at the very least. My issue is like this: people act like if stuff hits the fan, you know, like let's say the world crumbles or whatever, right? People are like, oh, only gold's gonna be valuable again. It's like, oh yeah, you know, a shiny rock. Like, what's the utility of gold if something happens to the world? Genuinely, right? Jewelry's going to be less influential. Nobody's going to care about looking nice if something crazy happens. As well as, like, it's a shiny rock, you know? And so I don't necessarily like that argument. People are like, oh, stuff might go down. Buy gold. Why? You know? Yeah, mortgage rates shot up today, too. So mortgage rates came out early this morning at 7 a.m. They came out at, where'd they go? They came out at 6.36%, almost 6.4% versus 6.15% last time. So they went up to almost 6.4%. They increased a lot week to week, 30-year rates. So rates are changing, too, on the upside. A little bit of sympathy probably from the hawkish stance by the Fed. The payroll numbers causing mortgage rates to go up a little bit. All right, guys, we got 15 minutes left. 15 minutes. Where's Bitcoin? Bitcoin all the way down to 62. Is that 63s or 64s? Bitcoin has been so freaking predictable, though, man. Like, people act like you make all the money here. If you're short-term trading Bitcoin, dude, the last, like, 8-9 months, how predictable is it? You buy it down here, it's a trend. You sell it up there, it's one of the most obvious trends. Like, look at this. This thing has 1, 2, 3, 4, 5, 6 really confirmations in this trend. Just this. You know, it's one of the most predictable things I've ever seen. And maybe that's the point. But, man, as long as you don't get unlucky and get caught on the trend break. Stocks almost never maintain a trend like this long term. Almost never. You know, so if you like, even if you don't like holding Bitcoin long term, this type of trend is so freaking predictable. You know, you'll never see this in stocks, really. Not really. Not in any type of like super predictable way like this. Yeah. Trend is your friend, definitely with Bitcoin. What do you think about gold? Bro, how many... Okay, look. Gold's great. I've said what I've thought about gold. You know? Have y'all not been here to see the last time I talked about gold 30 seconds ago? You know? Stocks have news that break those patterns? Yeah, for sure. Bitcoin just isn't influenced by, like, Fed decisions, inflation reports. It is influenced, but not in any type of big way where it's going to cause a break of that trend, I think. We saw John, dude, the gold people show up every stream. And that's fine. I like gold, okay? But they ask me the same thing over and over again. Half of them are probably bots, you know? Only on the big streams, though. Like, only on the Fed Minutes reports and the FOMC decisions. They probably go to every major stream, I think. But Well, no, this is just different. This is a daily chart. And so in theory, if you like Bitcoin, you could literally just wait to accumulate more on these type of dips every single freaking time it does it. If you like Bitcoin, you know. My dad always watches you. That's cool. I appreciate it. Tell your dad I said hey, you know. Bitcoin needs like major news to move it. Yeah. Well, it's a newer asset. Yeah, we're gonna stream Robotaxi, David. So yeah, we'll definitely stream that. Okay, I was wondering what you were saying, Trebek, because you ended up saying something else, you know. And so then I didn't know whether you're just typing random words there or what. But I don't know if I'm feeling this. It's a little bit too, like, the guy who thinks he's a robot and grandma's boy type of thing for me. That type of music, it's a little bit too much. Let me see. All right, so SPY pull it back. Apple at 228. So I'm watching Apple. How does the HBO Bitcoin documentary affect Bitcoin in your opinion? I don't know. I haven't really seen it. Let me ask AI. What documentary is it? HBO. The recent HBO documentary Money Electric, The Bitcoin Mystery aired October 8th. Stirred up renewed interest debate in the crypto community, particularly about the identity of Satoshi Nakamoto. The documentary claims to have uncovered the identity of Nakamoto, controversially suggesting it could be Peter Todd, a Bitcoin core developer. Todd and many others in the community have refuted this, citing inconsistencies in the timeline and misrepresentations in his role in Bitcoin's development. Todd himself has dismissed the claim, saying the documentary sensationalizes the story and lacks credibility, end quote. Yeah, I mean, I don't know. I don't think it matters. I don't think Bitcoin's going to move from it. There's a lot of theories. None of them are really provable. I care about documentaries. I love documentaries. You know, I'm a documentary person, but it's a love-hate thing. If I put on a documentary for longer than 20 minutes, my ADD is making me go to sleep. I can't help it. I could be super into the documentary, love it, think it's great. I'm falling asleep in 20 minutes, no matter what. No matter how much I like it or dislike it. ADHD is like, nah, you're going to sleep. I can't help it. Anytime I want to fall asleep, I put on a documentary, I'm out in 20 minutes. It could be about anything. History documentaries are the worst, but it could be anything. Heading to the pumpkin farm. Yeah, we should go do something like that. All right, so SPY pulled it back pretty heavily. Again, broke lifetime highs. I think it's more likely the SPY is going to range the rest of the day. It did what it was supposed to do. I think right now we're probably going to get choppy action. Again, a lot of the time when we have lifetime highs like this in the SPY will go up to them, tap highs, and then kind of go sideways, you know, and then do something, and then, you know, like that's what the market will do a lot of the time when it has lifetime highs. Very rarely will it break lifetime highs and then continue to break and break and break all day. That's just very, very rare. Usually it's like 1 or 2 breaks max, and then it slows. So it's not leaked. All right, chat. Yeah, I've seen that. It's a hard watch. That war is actually really interesting how it started. That war's super interesting. Like, we should have never been in that war, you know, personally, but, you know, I guess it's really nuanced. Like, apparently there was some type of, like, system where English colonizers went there and, like, set up stuff. It basically had them, like, it's super nuanced. And then when the people of Vietnam needed help from the U.S., you know, it's... Yeah, it's a little bit too political to talk about on a stream, but it's messy. That's all I'll say. Apple up to 228s. There is no meeting. Yeah, I remember. I grew up with websites like that. I'm not gonna go to them now. Yeah, stocks again. Nvidia dipping down a little bit. Silver down some. I'm gonna put Nvidia's chart up. And yeah, we got 5 minutes until this report drops, chat. 5 minutes. Nvidia right at the bottom of this range. We have Bitcoin up here. We've got the SPY on the left, Nvidia in the middle, Bitcoin on the right. We can also put gold up, I guess. Gold's probably gonna... We'll put gold up since so many people ask about it. Everything kind of trending the same except for Apple, Amazon, SPY, and tech. Yeah, I've got some Vietnamese friends. Julie and Trung are their names. They got that really good green jello cake. I can't remember what it's called. I think it's pandan. Super good. They make it for us sometimes, and it's good. But anyways, Apple at 228. We'll see if it holds. Market's not going to crash from this for sure. If the market crashes, it's going to be tomorrow from CPI. If CPI spikes up a lot, then in theory it could. It's not super likely, but if CPI inflation data comes in really hot tomorrow, that can certainly negatively impact markets. But the FOMC Minutes report's not going to crash markets. It's just not big enough. Nobody cares enough about it to influence markets. We're going to get some influence on the Fed and why they chose to make the decisions that they did. But yeah, it's just not going to move markets like that, in my opinion. Yeah, we got about 3 minutes left, chat. What do you think of Bitcoin? Buy or sell? I mean, I think long term it's always a buy, but who knows what's going to happen short term, and I could be wrong. I like Bitcoin. All right, guys, we got 2 minutes left. 2 minutes. We got about 2,000 people watching. I appreciate y'all watching us with us today. Don't forget to hit the subscribe button. We're going to break everything down live on stream like we always do. We cover this every time it goes live. We break it all down. We use AI to really break it down in an understandable way. And so, again, hit the sub button, hit the notification bell. We appreciate it. We're going to break all of it down using AI. We're going to give you cliff notes. We're going to do all of this for free right here. So, again, stick around. We appreciate it. Yeah, we got it. We're waiting. All right, so when was this last meeting here, guys? All right, so here's the report. It's going to come out in 1 minute, chat. 1 minute for this report to go live. When was the last one? Let me see. So the timer's a little bit early. So this meeting was from September 18th. And so I know how to hack this report too. September 18th. Yeah. All right, so this is from September 18th. All right, guys, here we go. We got 30 seconds. 30 seconds. Again, we're going to use AI to break it down in an understandable way. All right, so 15 seconds. Five seconds. Hit the live button next to the play button. Make sure you're fully caught up on stream chat. And here's the report. Goes live right now. We're waiting for it. Minutes report hasn't out yet. We're still waiting for it to release. Waiting. Market hasn't really moved. There's the SPY. But this is when it comes out. Okay, so we got it. All right, so we're going to break down the developments in market and in financial markets and open market operations. So we're going to give you kind of like a rough estimate of about 300 words of that right here. So the Fed Minutes report is out. All right. And so again, the manager's review of financial markets highlighted a notable decline in nominal treasury yields driven by weaker economic data and expectations of reduced policy restraint. Lower expected real yields along with declines in inflation compensation contributed to this drop. Broad equity prices rose modestly. Credit spreads remained narrow. A brief period of elevated market volatility in early August influenced by speculative position unwinding and external events like the Bank of Japan policy communication. Basically, the carry trade was contained and market recovered quickly from that. In terms of policy expectation, the market implied path for the Fed funds rate shifted down significantly with expectations of up to 100 basis points of cuts by the end of the year compared to 50 basis points projected earlier. Surveys of market participants reflect the expectations of 25 cut at the September meeting, though some saw a higher likelihood of 50 basis point cut. Balance sheet expectations remained stable. Respondents were not concerned about an economic shutdown imminently. Or downturn imminently. Additionally, many advanced foreign economies, including UK, ECB, and the Bank of Canada, continued cutting rates. Market implied expectations for year-end policy rates declined, albeit less so than the Fed Reserve. This continued to a slight weakening of the U.S. dollar. All right, so that's the first part of this. We're going to go ahead and break it. The next one may get a little bit smaller summary, but yeah, that's the first part. Bear with me, chat. We're going to keep going here. So stick around. We're reading this now. The next part is going to be the review of the economic situation, like GDP, PCE, all that stuff. All right, so we're going to just review the whole thing. Let's see if it lets me. All right, so stick around. At the time of the meeting, the U.S. economy showed solid real GDP growth. Job gains moderated and unemployment remained slightly went up but remained low. CPI inflation declined compared to the previous year with 12-month PCE inflation at 2.5% in July and core at 2.6%. These figures, alongside lower inflation measures in August, indicated some easing of inflation pressures and labor market conditions softened. And this is how you can tell this was prior to the payroll data coming out wildly more than expected. And so, again, so substantial majority backed a half-point rate cut. Some officials would have preferred a quarter-point cut. And so we're going to put this in chat as well. So, again, one thing that you see is most people wanted 50 basis point cuts, which showed a more hawkish Fed, or which showed a more dovish Fed. And so, again, I'm going to put some stuff up here, and you can read it. And we're kind of breaking this down a little bit more. GDP growth in foreign economies slowed, particularly in manufacturing. Those services remained resilient. Inflation abroad varied, with advanced foreign economies showing mixed progress. Central banks, including the ECB, Bank of England, and Bank of Mexico, continued to ease policies to tackle inflation. Japan maintained a tighter monetary stance, a restrictive monetary stance. In financial markets, treasury yields dropped due to reduced inflation expectations, and stock indexes rose despite early volatility in August. Borrowing costs in credit markets remained high, but saw small declines. Market expectations shifted towards further Federal Reserve policy easing, with declines in the U.S. interest rates and narrowing of international interest rate differentials. So again, we're looking at the Cliff Notes regarding all of this. So stick around. So several participants noted a 25 basis point cut would be in line with a gradual path of normalization. A few participants added a 25 basis point cut could signal a more predictable path of normalization. They generally said it was important to communicate decisions are conditional and on evolution of economy, implications for balance of risks, and therefore not on a preset course. And so basically they're saying we don't know, it's data dependent. Several discussed importance of communicating quantitative tightening could continue for some time. Basically, so here's something that is really interesting. So basically, okay, people are asking me for English. And the market hasn't really touched anything with this report. It's a 5-minute chart, so it's a little bit harder to see the moves, but this is the move we had since the Fed Minutes report. Here's the Fed Minutes report. We've gone up a little bit. Basically, what I'm seeing here is that they really wanted to stress that QT, quantitative tightening, could continue for some time, even as rates go down. So what this means is quantitative tightening is kind of the opposite of quantitative easing. Quantitative tightening, most likely this is passive QT, which means that like QE is when the Fed expands their balance sheet through creating online bank reserves, printing money through online bank reserves, and then using that to buy financial assets, injecting liquidity into markets, allowing interest rates to go down. Quantitative tightening means the Fed is reducing their balance sheet mostly by passive QT, letting their current holdings mature and run off. It's what the Fed does if it's the opposite of printing money. It reduces their supply and their impact on the bond market. Because without their impact, bond prices, without that impact, interest rates are going to go up. And so QT is basically balancing it out a little bit with rate cuts. We're doing rate cuts, but we're also, continuing quantitative tightening, which is, again, reducing the Fed's balance sheet. Yeah, I told you guys it might not do anything. We cover it every week, every 3 weeks. It's an update on the last meeting, and we're breaking it down as best we can. But yeah, most of them thought 50 basis point cut was the right move in September. Some participants noted there had been a plausible case for 25 cut at the July meeting. Some noted they would have preferred 25 cut at September, and a few others indicated they could have supported that. So I think now they're kind of pivoting their tune a little bit. One thing that's big, that's really different. So again, the last Federal Reserve meeting in September, the Federal Reserve cut interest rates, so they're bringing interest rates down versus pausing rates like we have for a year straight. And so when they do that, the reason they do that is to help the economy. They want to boost the economy. Hopefully, where I think it needs this the most is the rent and mortgage market, of course. I think more people, not as many people are refinancing, buying, and so rent has gone up, and people are paying obscene amounts for rent. Also, inflation has risen, and so when expenses are more, landlords raise prices on rent, and so a lot of things contribute to higher rent. But that's the market I think it needs it the most. Interest rates are not necessarily low, and rent is high, and so people are having a really hard time getting by. And I think if we do lower rates, that's where we need to, do as much work. I don't think we should print money. I don't think we should send out anything. I think cutting rates is fine. But yeah, we'll see what happens. Yeah, the market is going up. Powell's not speaking today, guys. So again, this is a report. It's a reaction to the last Fed meeting. It's a reaction to the September meeting is what this Fed report shows. And so yeah, market's not really moving. Gold's not really moving. Nvidia's not really moving. SPY broke lifetime highs prior to this meeting, and so I think even with this meeting, it's going to be hard for the SPY to keep up with this type of thing. The volatility was already high this morning, and so tomorrow's CPI report also puts a little bit more pressure on sideways neutral activity in the stock market and futures markets, specifically because less big banks, hedge funds, traders in general want to take big positions leading up to a volatile event like CPI tomorrow morning. I'm still thinking it doesn't mean we're not going to move at all, but that might slow today's Fed meeting, Fed Minutes report down a little bit. All right, guys. Here, I'm going to put this up on screen so people can see it. All right, so I'm gonna put this down again. Wait. There's no actual meeting today. It's a detailed reported reaction to the last FOMC meeting. What do you guys think CPI is going to show up as? I'm going to end this poll, and we're going to do another poll asking about CPI. Will CPI come in hot or cold? A lot of people think we're going to come in high for CPI tomorrow based off of the payroll numbers. Payroll numbers came in 80% more than expected. All right, so there you go. We got that poll going live. Here, so the way I hack this report, guys, the way I got it, sometimes the Fed, like, their website gets overcrowded for these reports. I'll teach you the way I get it before. I type in the URL. I change the URL. So this is the URL code. So it wasn't reflecting on this page, right? So if I go to the Fed meeting, it wasn't reflecting here. It wasn't reflecting here, and so it didn't show up in time. And so I know 2024 9/18. And so I can put in the date the Fed meeting was, 2024 9/18, and then put the rest on it, and I can pull it up before it actually shows up for everybody else. I think either way they will take it as good news. Maybe. CPI is inflation data, right? So inflation data tomorrow is wildly influential. But yeah, again, I'm going to read this again. Regarding the FOMC decisions outlined in the staff review, the committee opted to lower the federal funds by 50 basis points. This move was based on progress towards 2% inflation target and a balance of the risks in the economy. The decision was made in light of slowing inflation and labor market cooling, but with continued solid economic growth. The FOMC members also discussed policy adjustments, ongoing reduction of the Federal Reserve's Treasury holdings, which is QT, quantitative tightening, agency debt and agency MBSs. The committee emphasized the need for flexibility and adjustments based on evolving conditions, reaffirmed its commitment to supporting both maximum employment and returning inflation to 2%. They were broad agreement to lower rates. Some members preferred smaller cuts to 25 basis point or to 50 basis points like they did. Some people wanted 25, basically. Reflects the debate about how quickly to ease policy given inflation trends in the labor market. So it says going forward, they're going to closely monitor economic activity to determine rate cuts or adjustments, and they're going to take a case-by-case approach. Basically, they don't know what they're going to do for the rest of this year is what we got in this report today. That's basically what we got. We don't know. Again, that's what happened. We don't know. And again, I can basically tell you why. It's because, payroll numbers were super high. Last Friday, payroll numbers were 254,000, and the expected number was 145,000 roughly. And so we came in like 70-80% higher than expected for payroll numbers, which the Federal Reserve cuts interest rates to try to stimulate the economy if the economy is weak. If we've got 80% more jobs than expected on the payroll report, it's not the biggest argument for a weak economy and an economy that needs the Federal Reserve to cut interest rates, right? And so that's kind of what we're experiencing now with this, in which now if you look at the actual probabilities, and I'm going to see if they changed a little bit on the CME watch tool, but now if you look at these probabilities, again, previously we had 50 basis point cut as an option and 25 basis point cut as an option. Now we have a 24% chance that we're not going to do any cut, no cut. And we have a 76% chance of a 25 basis point cut, basically being the max right now. Now, tomorrow's inflation report is going to be more influential over this than I think the Fed minutes. It's at 8:30, so if you want to watch that, hit the subscribe button, hit the notification bell. We stream it all live right here for free. We don't charge a penny for anything. Also, if you want to check out one of my sponsors, check out TopStep. TopStep is a funded account program in futures, so you can day trade. And when you day trade futures, you can day trade the S&P, the NASDAQ, the Dow, the Russell, gold, currencies. Patterns are very similar to blue chip stocks and index funds like the SPY and Q. You can trade their price action in the NASDAQ and the E-mini. What TopStep does is they give you a demo and they test your skill with the demo. If you pass the test with the demo, they fund you. If you fail, you only lose what you pay for it. And they've paid out over $40 million. And so one of the biggest edges in funding right now is that you can use TopStep X and have zero commission when you do it, right? Even if I traded futures on TOS, I still have to pay commissions there. There's no commissions on Top Step X. And so it really is one of the biggest edges. And again, they give you a 50K demo. You got to make 3K in profit without losing 2K first while following their rules. And so your risk is less. Most day traders lose money. And so most day traders are going to lose because most day traders lose. It's a lot cheaper to lose on here. If you pass it, you still get 90% split. So it's the best of both worlds. But they're a sponsor of mine. They pay me money. I'm biased because of it. But I genuinely think it's a good option because almost all day traders are going to lose money. And if you don't let them do something like this, they're going to lose $30, $40, $50,000 if you let them, if they have it. And so this is just a much better way to limit your risk, learn how to trade, have some pressure. You know, if you're good enough, you could pass it. If you're not, you probably would have lost more anyway. And so if you want to check it out, here's the link. Short tomorrow. Is tomorrow bull or bearish, guys? Let me know. Jakes for the report, John. You're the MVP. Hey, thanks, Foo. Appreciate it. Yeah, well, the whole market's a little bit different, though, right? So, like, people like to... So, some weird stuff happened after 2020. You know, specifically the supply chain struggled, right? When the supply chain struggled, inflation got worse, unemployment got higher, and that was a big impact over everything, you know. One of the reasons we've seen so much growth, and some people can't believe it, they're like, oh no, they've got to be lying, and in some ways they have, but the reason we see so much growth is because the supply chain was so disrupted by everything that when they finally got it fixed, we had an influx of growth from that, right? At least that's what they're saying. And so that's one of the reasons you see inflation get much better so quickly. Number one is because it was so high to begin with and it needed to correct. Nobody was, you know, when prices go up that much, people stop buying everything in general, right? So that's going to correct it a little bit. But then the supply chain got fixed, and so I'm not going to say fixed. It got better, and so prices got better, labor market got better, and a lot of part-time work because you got to be able to afford stuff as well. So like, there's a lot of nuance behind it, but payroll numbers did scare a lot of people. Friday's payroll report, and again, I think the Fed is going to be a lot more hawkish than we expected. Yeah, gold's coming down a little bit. I get Nvidia sideways. We did get choppiness. We just broke highs beforehand. SPY's at 575. Yeah, I'll be streaming inflation data at 8:30. That's when it happens. Is 8:30. Yeah, and the minutes report is interesting because it gives you some breakdowns. So a substantial majority backed a half-point cut. So almost everybody wanted 50. And again, this is, like, I'm here to try to teach you about this stuff, guys. Like, that's the reason people watch this channel. Understand, if I know you might have some wild expectation regarding the FOMC meeting. For whatever reason, people get, like, wrapped up in it, and they just make these ridiculous bets on it. You know, like, I know the last one, somebody bet on like a rate hike or something like that, and they lost a bunch of money. And I was there to tell them before the results came out, hey, bro, that's a dumb bet. We're not going to raise rates. But yeah, for whatever reason, every FOMC meeting, people pick these wild bets. You know, again, if you look at the CME watch tool 10 minutes before the report comes out, that's what they're going to do. If you look at the CME watch tool 10 minutes before the report comes out, that's what they're going to do. You know, it's super, super improbable that they're going to do anything else besides that. So again, no offense, guys, but don't be dumb. You know, like, be smart. Think about it. Like, look at the history of it. Understand what it is. 8:30 Eastern Standard Time, we get CPI inflation data. Again, so CPI inflation data, 8:30 a.m. tomorrow morning. We will be streaming the entire thing. The reason we get thousands of people that show up for that is because we do cover it very quickly. So we do cover it fast, chat. So again, if you haven't already, and again, I'm going to day trade a little bit now. We're kind of choppy and flat at this point in time, but I do believe we might push up a little bit from here. Who knows? We're going to take 4 contracts in futures. There we go. gonna take a piece of it off, take a piece of it off, take another piece of it off. See if we get a little bounce, we'll cut the rest there. So yeah, we just made $20 or so. And again, the good thing is that there's no commission, so I'm paying less than $4 in fees in this entire trade. You know, so we'll take it. We broke lifetime highs in the NASDAQ, or not the NASDAQ, I'm sorry, in the SPY earlier. So the SPY broke lifetime highs. This is basically the QQQ. And again, in the futures market, you could day trade the S&P, the NASDAQ, basically the QQQ price action. And so if you like the Q or the SPY, you can basically day trade those in futures. A lot of currencies. A lot of people trading Forex should be trading futures too. But, yeah. I don't mind poking around at it. And again, if you want to check out Top Step, 0 commission on Top Step X, the biggest edge in funding. And again, even if I was going to trade futures on TOS, right, it's going to, there's going to be commissions on TOS if I try to trade them too. So that's actually a huge edge. I mean, I'm reading. Most of the questions are what time's the CPI. I answered that. Shorts could use a timber drop in the NASDAQ all the way until tomorrow. Yeah, the range is just so small right now. Look how small the range is. I think the range will probably continue like this into CPI. And if CPI is high, we're going to fall. If CPI is low, we're going to go up. That could be wrong as well. We might have better inflation data and go down. You never really know. Bitcoin pulling back. A lot of people talking about Bitcoin too. Let me see. Yeah, Bitcoin is falling, right? I'm going to see if there's any news about this. A lot of tornadoes being seen around Florida too. Yeah, but you can trade, but there's a lot of red tape there that there aren't in futures. This is that trend you talked about? Is it? Yeah, I mean, we're at the top of the range of that trend. We really are. You know? But if this continues, we'll drop down to like 52K or something next. If the trend continues exactly, which I'm not sure if it will. Again, eventually every trend breaks. It's just about how long it'll take for this trend to break. Yeah. What's CPI by? I don't know. It depends on what CPI shows up at. CPI is expected tomorrow at 2.3%. That's a pretty low expectation for CPI. I'm trying to see when PCE comes out as well. I think, what was the last core PCE report? .2% last time for PCE. 0.3% month to month. Oh no, never mind. 0.2 or 0.1% month to month. So that's not bad, but PCE should drop. I think it's next week. No. PCE drops. Let me see. Not next week. The week after next. PCE drops the week of the 21st. I'm pretty sure. I'm pretty sure it's October 25th is when PCE comes out, but I might be wrong. They haven't scheduled it yet. I think next week is retail sales. Yeah, next week we got retail sales. Yeah, I'm gonna get out of here, guys, as well. Y'all be good. Y'all be safe. And yeah, we're doing okay. I mean, we're very tight ranged in the NASDAQ as well, and I think that's what we're gonna get leading into. Like, look how sideways the range is here. I think that's what we're gonna get leading into CPI tomorrow. You know, I think we're seeing that right now. And again, we're at the top of the range now too. It doesn't mean we're not going to hold. But again, if you want to check out Top Step with me, link is in the description. I know I lost thousands when I first got started day trading, and most day traders lose. And so, you know, if you risk, yeah, you could just lose thousands. Trading CPI. Most day traders lose. If you try to put the money up yourself, you're going to lose most likely. And so it just makes sense to try a funded program. Check it out. I'll see you guys later. Y'all be good. I'm biased, though. They pay me money, so of course I'm biased. I'll see you guys later. Y'all be good. Apple breaking lifetime highs right now. Yeah, not lifetime highs. I'm sorry. I don't know why I keep calling it that. But yeah, I'll see you guys later. Y'all be good.